Anisha, she's going to tell us why NTPC as well as Power Grid, both of them are buzzing around. Anisha.
Well, yes, Nigel. So in the wake of the volatility that we are seeing in other business, the growth opportunities being a bit volatile, we are seeing kind of a defensive buying in probably NTPC and Power Grid because they have a regulated income source. So how it works in layman languages that they have a regulated equity, let's say about 10,000 crores, and they have a fixed return on equity of around 15% or thereabout, which they make, and then there is a backward calculation over that 1,500 to reach the revenue numbers, and that gets split between the state. So in that order, the profits are pretty much sacred, and that is why we are seeing some buying in coming in there. And also, if you look at it, who are the consumers? It's basically the governments and the SEB which buy this power. So that is why they're also a bit insulated by the cash crunch that we are seeing. In fact, if at all, the windfall cash that we are seeing coming into the SEBs might just help them to make the balance sheet better, and that just improves their the opportunity for these companies. Also, another thing that can be impacting is that the impact of demonetization is expected to be disinflationary, which means that the yields will come off. And we have seen historically that these regulated equity players have a inverse proportion to the government equity because the gap between the fixed income returns and such companies increases, and that is why they become more attractive. And also, there is a sense in the market that now the private capex is now a bit delayed, and only further capex will be coming in through the government. And of course, these are the likely players to get more influx of capex.
Okay, thank you very much, Anisha, for that very neat explanation. I understood every word of what was a very complex argument.